Hi, welcome to an Easy Trader update. This is Kim speaking on Wednesday the 18th of September. Okay, in this update I want to look at the FOMC economic projections and statements and the potential outcome, and also how we possibly could trade it, and we'll have a look at the euro dollar as well. I'm going to focus mainly on the euro dollar and how this may be traded to a degree. I mean, this is only a very high level version of what may happen, but it may give you an idea. Of course, we'll be trading in our newsroom, full details and a slightly different method we'll be kicking off with, but here's an idea, open idea of what may happen and things to be wary of. This is the biggest news we've had this month and maybe rolled on for some period. Needless to say, even after the figures are actually launched, the talking and the speculation will continue for some time afterwards. Okay, firstly, what's expected? Where there's quite a large expectation now of some tapering of the quantitative easing to start. Now, this is expected widely to come in between 5 and 10 billion reduction, and this is on the allocation of monthly long-term treasuries. Long-term treasuries is a reduction to long-term treasuries, not to the mortgage-backed asset class. How it might work out? Well, any reduction in quantitative easing will be, or may well be, dollar positive. I say will be with caution here, but it may be dollar positive, and we could see the euro cable plummet, dollar yen fly. But it's not as clear-cut as focus will be on the statement itself. There's quite a lot of things coming out all at one go. Of course, we will see the quantitative easing. We could see a reaction from that, followed by a counter-reaction or a continuation reaction from what's the rest of the content within the statement. But I can assure you the first thing people will be looking for, is there any quantitative easing, a reduction? Okay, I wanted to now look over the previous price action around about these news events, because it's important when you're coming up to something that's pretty major to understand what's coming in. I'm just going to pull this up so you can see it a little bit better, because I realise it's just out of shot, and I'll move it across a little bit because it's still out of shot. And the important thing to be looking at here is this was way back in May, 1st of May, and if you can see here the whipsaw action that sort of occurred around about this area. I did a pretty good job there of scribbling all over it, but you can see it literally dropped, it rallied, it dropped, it rallied. And why did it come out like that? Well, basically the 1st of May the committee said they were prepared to increase or reduce the pace of purchases, so there wasn't too much of a hint of anything happening there. It was just continuing in a line of we'll help where needed, or we'll reduce where needed. And then come along the 19th of June, let's pull this into size, and what we saw here was a huge move. Now this move worked on most of the currencies, and it was relatively straightforward. It had some retracements within it, and there was obviously the Fed statement is half an hour later, and it's more the Q&A session that's to be worried about if you're trading. But I'm looking at this first half hour really, and we saw a relatively good straightforward down sale. This is the euro dollar. The euro sold off, the dollar strengthening. What caused this? Well, there was this sort of immediate 19th of June expectation that tapering would result in 20 billion in September was flying out, but Bernanke actually said they may be on course to end easing in 2014. So there was a lot of speculation and figures starting to be thrown out almost immediately on the fact that he said what he said there. But the important thing was he did actually say end easing in 2014. That didn't mean to say it would or it didn't actually say when he was going to start ending easing completely. Okay, and that leads us on to the 31st of July, which was the most recent. And again, important thing to know, we saw the whipsaw, we saw this whipsaw action, and this is just something to be very, very wary of if you're going to try and trade this. Some of the moves weren't particularly massive. In fact, let me just check on the numbers here. We did see, euro did probably the best at that 45 pip upward move, but there would have been a hell of a lot of gaps, although it's not shown on here, or slippage. If you're trying to trade it, it would have been quite difficult. It then came back below the starting point, went even lower, but then rallied on. Why did it do that? Well, hopefully this is all in view. I'm going to have to just move it up a little bit. There we go. So what happened? Well, disinflation was highlighted. The risk of disinflation was highlighted. Now, and this was the comment. The bottom line for the Fed is the downside risk for the economy are diminishing, and if price gains decelerate to the point where they are worrying about inflation, they might give them some pause on tapering. In other words, it could go one way or the other way. It was not decisive at all. So there you go. That's what's happened up until now. But the important thing to understand is learn from the price action. Where if it's a clear signal, we may get a clear movement and not a lot of other things happening. So let's have a look at the charts. This is a daily chart of the euro dollar. In fact, let's just make it a bit bigger so you can see it. There we go. So you don't really see everything that's below it, but you can see what the current state of play there. Yesterday we had an inside bar on the previous range. Today we're pretty much doing exactly the same thing. What will happen this evening? And it's well, it really depends on the outcome. And if it lines up, if there's any indecision, we'll get whipsaw action. And this is one way. This is one of the reasons I just thought I'd do this update in terms of I'm not going to try and pre-guess what's going to happen, but I know if it's the quantitative easing starts, although it's possibly partially priced in, there's hardly any real sign of it being priced in here. We could see quite a reaction. However, if there's other comments coming in with it, or it's smaller than expected, or it doesn't happen at all, of course we could see this. If it doesn't happen, we'll see the euro rally, I'm sure. If we see it happen, the euro is going to dump. Which way it's going to go, I don't know. But what I can say is, if we to watch out for the whipsaw. If we get a sudden move down, a very fast move up. I mean, the old way was to trace on this sort of news was the ABC, particularly on the E-minis. The news would come out, the reaction, profit taking, counter reaction again, and continuation of the move, which could drift on for quite some time. So that would be the point, and it's trying to catch this, because if we get this whipsaw action that we've seen before, and whatever it does, it's not going to be safe necessarily to try and trade. Okay, you may get, if you're lucky, you may get a bit of this downward move, but if it comes right the way up, it goes through where you thought it's stopping, and it goes all the way up there's a good chance it will stop you out if you're putting your stops at the previous highs or something like this. And then of course it could follow through and you're going to get into a right mess. So one way, just a consideration, maybe watching the move coming down, waiting for any retrace. Okay, we're not going to get in here necessarily. You could try a small position in here if there's some good support, good resistance in this particular case. This is assuming it's coming downwards. Obviously it's vice versa if it's running upward. But if there's some good resistance at this point, you think it's a good enough point here, you may want to try a little trade here. But the safe point may be, if the news is consistent, is to be looking for the short round about here. Now this is not necessarily meaning you're going to make a massive profit out of it, but it may be marginally safer than trying to get in too early. But as I say, depending on the price reaction, it may be an alternative. So I just really wanted to bring that to your attention. So there we go. I hope you have a great trade if you're trading it. Otherwise, if you're trading over the next day or two, you'll see the reaction from today, and it may set the scene for some further movement over the coming days anyway, leading into Friday, which has got no news out whatsoever and could be quite a quiet day. That's it from me. Hope you have a great one. Bye for now.